specifically in that China data, what was it that rattled investors?
Well, it was a really unusual day on the Australian share market. As you mentioned, Kate, we saw a holiday in Victoria, in South Australia, the ACT in Tasmania, and you would expect it to be a light volume day. But if you look at the volumes that went through the market today, it was actually on par with what we saw last Monday.
Wow,
so
okay.
Actually we saw normal volumes from Monday, which is highly unusual given the public holiday that we've seen in Australia. And it is solely the China concerns which drove those volumes, as well as the loss that we saw on the market. And I think there's two separate issues in China that the market's been grappling with. First of all, we did see those trade numbers over the weekend. The deficit was a big surprise, $23 billion, when the market was expecting to see a surplus of $14.5 billion for the month of February. And this really eats into fears that we are seeing China slowing down. Now, these numbers could have been distorted by where the Lunar New Year fell this year, so we'll have to watch the next couple of months. But secondly, last week what we saw was this first corporate default in China since 1997, when the debt markets were sanctioned by the Chinese government. And over in China, you have to understand the attitude that a lot of these investments are probably thought of as backstopped by the Chinese government. So the fact that we haven't seen a corporate default in decades, and if there was going to be one, the perception that the Chinese government would step in and bail out that particular company is probably what really prevailed over the last few decades. Now, we haven't seen the Chinese government stepping in this time, and that's really set a lot of nerves through the Chinese market as well as the Chinese lending system. Now, in China, if you have a look at the lending system, collateral is not just cash, but often it's commodities as well, commodities like copper. And if we do see a domino effect and we see more corporates falling over, then we could see, I guess, not only a flight from capital, but also some of these commodities which act as collateral also falling. And that's really what we saw on the market today. If you have a look at Shanghai copper, it was 5% down, which is the daily limit. So we did see Shanghai copper at its maximum limit down today at down 5%. We also saw the 7-day repo rate in China at a 1-year low, and that says that the banks are hoarding liquidity and hoarding money at the moment, so they're very cautious. And of course, the iron ore spot, the spot price that we've been watching and talking about all day as well, and we've seen that at an 8-month low at 114.60 US a ton. So lots going on in terms of the market. It was all about that material space today, which makes up about 20% of the Aussie share market, and that's really why we saw the strong losses on the market, as well as the relatively strong volumes for a day when a lot of Australia was on holidays.
Yeah, on this one, in terms of why they didn't go straight for that 100%, why they just didn't launch a full takeover, we're hearing that perhaps it could have something to do with the way that Leighton's debt is structured. Is that right?
It is quite unusual. They're only looking at 74% instead of the full 100%, but it does look like through the creeping provisions, they're going to look at creeping up that register anyway. So we would envisage that Hotchkiss would get pretty close to 100% over time. I guess Leighton's does have a lot of debt, and that could be a consideration as well. But I guess if we have a look at the share price actually going above that offer price, one of the key considerations is also the short positions in this stock. And the last ASIC report had the short positions in Leighton's at 7.1%. So no doubt some short covering going on in this stock, given the sharp rise that we've seen in the share price for Leighton's over the last 4 sessions. And remember that this is one that ASIC is also looking into because of the sharp rise that we've seen in price and volumes over the last couple of sessions before this announcement came out as well. On Wednesday, we saw typical volumes in Leighton's at 1 million shares being traded. By Thursday, that was $2.7 million with no announcement to the market. And by Friday, we saw that reaching 4.7 million shares being traded. So the volumes and the price action a little bit suspicious in terms of Leighton's shares, and so ASIC will be looking into that. But altogether, today's bid by Hotchkiss really represents hope for Leighton's shareholders. They've been through a lot in the last 52 weeks, the Middle East bribery scandal, and also troubles getting the money from their customers. The receivables really just soaring in the last set of numbers that we saw at $5.1 billion compared to the previous year where it was $3.8 billion. And this is something that's been happening for Leighton's for a number of years now. So it does look like Hotchkiss looking at overhauling operations. The bid was a significant premium to the last traded price, about a 19% premium. And I guess if we have a look at the shares, some short covering happening in terms of the stock today, and a good performance by Leighton's.
Out here in Bell Direct, your outlook for the rest of the week?
I think given that a lot of the concerns around China drove the market today, we have to be watching China very closely, and especially the Shanghai Composite, which gives us an idea of what's happening over there. Just having a look at the chart for the Shanghai Composite, and this is what it looks like. We're looking at a 5-year chart here, and you can see that the low over the last 5 years, and really support for the market has been at that 2,000 point mark. We're very close to that at the moment for the Shanghai Composite, just 18 points away. So a break of that 2,000 point mark will probably signify more risk aversion on the Australian share market, especially for the material space as well as the Aussie dollar. The Australian market often seen as a way to get exposure to that Chinese story by overseas investors. So I think China is going to be absolutely crucial, as are the employment data that we will see out here